selling cash secured put options on Cal-Maine Foods is what this video is about, ladies and gentlemen. However, this video is not about financial advice. It's not about a stock recommendation. It's not about a strategy recommendation. It is purely for educational purposes. I'm going to educate you on the process that I went through to select Cal-Maine Foods. More than likely, it's not suitable for you. You need to learn the process to figure out what is suitable for you. And then after that, I'll show you what I like about the stock, what I don't like about the stock, and then we'll go through and look at some charts of the stock. And then I will go through and place a paper trade for it. If you like this kind of stuff, hit that subscribe button. And if you want to learn how to sell cash secured put options on stocks that you wouldn't mind owning the rest of your life, then this is what you do. You go to the description in the below this video. There's going to be a link to I Have Success. It'll bring you over here. Download this cash secured put stock selection guide. Download the 3 stocks I sell cash secured put options on. When you read that, you're going to realize I sell cash secured put options on a whole lot of other stocks, but these are 3 that I've been doing for a long time, and I just theoretically talk about what I like about them. Not so much about you know, the money value, but what I like about those stocks. They're not stock recommendations. They're not suitable for you. Both of these downloads, these are to help give you a mental framework. And then there is a playlist below the link to the I Have Success. There's a playlist, and in all caps it says beginners. That has 5 videos in it. Watch those 5 videos. It'll go over the theories, the definitions, and that type of things of selling options, specifically cash secured put options, and if you get assigned, then covered calls. And also to help you get some charts set up, and it will give you a fundamental kind of quick overview of how you could use the Yahoo Finance free screener. So all that stuff together, you should be able to make decisions that are suitable for you in order to paper trade, just like I'm going to do. So let's get into it. And actually, let me just give you this real quick. Right here at 2 minutes and 45 seconds, boom, you saw it pop up. That is a link to a video of 5 reasons why I think if you have internet connection, bank account, and you spend money at least once a year, you should be selling cash secured put options on stocks that you wouldn't mind owning. Remember, it's at 2 minutes and 45 seconds, so you can watch this video and then go back and watch that one. Okay, let's get into it. So I'm using a paid version of a screener called Finbox, and I have I've got this set up. Which one is this? I've got some different screeners in here, and through running these screeners, here's some things that I have. I've got average volume for 3 months greater than 500,000. I've got an average dividend yield greater than 3%. I've got enterprise value to EBITDA less than 10. I got the PEG ratio less than 1. I got market cap greater than 2 billion, so it's going to be mid-cap stocks and larger. I got basic EPS growth greater than 15%. I got revenue growth greater than 15%. And I got price somewhere between $4 to $5, $50. That's what I have going on right now. Well, and so through running screens like this, that's how I have it set up at the moment, kind of dialed it in. But before I had that completely dialed in, I found the stock right here, Cal-Maine Foods. So we'll take a quick look at it. We see Cal-Maine Foods current price right now is $55.49. I was in the process of setting up my target price that I wanted to buy at, and that's why I was researching it, decided to make this video, so that's why that is not set up. EV over EBITDA less than 10 at 5.9. Now some of these things, if you don't know what they are, get out your pencil and paper, pen and paper, whatever, take notes, write it down, and look it up. But basically, this is kind of like the value that you're getting. PEG ratio, okay, that's at 0. Why is that at 0? I have to do a little bit of research. Why, right? I'm still comfortable with paper trading this, right? But why is that? I want to know why. Debt to equity. Why is that at 0? They don't have any debt. What's going on? Average volume, a little bit less than 1 million per average for the 3 months. Just taking a quick look through these health labels. Where is it? There we go. All right, looks good. Passing a lot of checks there. And that's opinions. All right, Finbox has it saying it's got about a 20% upside with about 66.81 price target. These other analysts, they're saying a little bit less than 60. What's standing out over here? All right, a lot of different ratios that that can be, looking through for some time efficiency, and just letting you know this is not the first time I've looked through this, but just showing you the things that I was looking at. Some things aren't looking great. Some things are looking okay. I put more or less value on stuff, emphasis on stuff. All right, so the next 10 years, it's got a revenue forecast of look at this one over here, 13%. Right, this is only at 1.2, so it's better than over here, right? Hewlett Packard, 0 negative. Dividends, looks like it's around giving about $5.40 a share. Dividend yield is kind of high. It's kind of high though, right? But you know what? Might be a little discrepancy. When I check Yahoo Finance, is a little bit lower, so that's all right. Payout ratio means when this number, you want to look at the sector. See how this is saying like 58% of the company's money. I mean, there's a little more detail to it than that, but big picture, 58% of the company's money is going in to pay this dividend, right? And this is only 15, but different sectors will have different averages, right? This looks real good, right? Only 1.9% of their revenue or whatever income going to paying that dividend. Very sustainable for that. 15, that should be pretty easy. Dividend coverage ratio is basically like how many months could they cover this with cash on hand. And this is growing. Look at this. We see that they looks like they cut the dividend here. It's had an average dividend of 1.1 for 5 years. Over 10 years, 1.9. All right, it's currently I don't have any stocks in this staple sector, so I'm all right with getting one. Financial health right here, okay, says it's great. It's in green. We don't need to read all that, right? This right here talks about what they do. Consumer staples. A lot of eggs, right? Eggs. People eat eggs. I eat eggs. What do we see right here? Stock price has taken a big hit over the last week. That's what kind of got me interested. Like, let me check that out. Let me check out the fundamentals. But let me check out what this big hit was. Maybe it's on. Maybe it's time to potentially buy. Maybe it's on sale. And look at this. Stock price often moves in the opposite direction of the market. So that's got me interested too. That I kind of like that for a variety of reasons. And then we got this models right here, and this quickly goes over different. So right here, this one, 5-year, was it discount cash flow growth? Current stock price is 55. By using this model, they say a fair value is 51. All right, so overvalued by that. But everywhere else, you're gonna see 55. You're seeing fair value by that metric is 90. I'm not gonna go through all of these 70 because the majority of them are going to be higher. I'll just randomly pick one here. Look at that, 68. Let me randomly randomly pick another one. I'm just randomly picking them for this video. I went through and looked at all the stuff, and that's what you'll do too. You won't just randomly pick stuff. This one, okay, the earnings power value, it tends to provide a downside case of fair value. So let me check that out. 32, right? So, okay, so I spent a lot more time doing that. I compare different companies in its sector to see what what their metrics look like, all that type of stuff. So I went through, I did all that, spent a good amount of time. And if you don't want to pay for Finbox, they don't really give you much free option on it if you don't want to pay for it. But if you do want to pay for it, just to let you know, there's an affiliate link in the description of this video that if you would be so kind to pay for your Finbox via my link, I'll get $5. But if you don't feel like doing that, then just use Yahoo Finance for free, and play with your stuff in there. So I went through. Okay, I was like, all right, I wanna check out selling. I don't want to just buy the stock right now. I want to see, because as it said, where was it? Right here. Stock has taken a big hit over the last week. We see it right here. Boom, that dropped down, right? So what this made me think is, okay, it was way up here. It was around the $60 range. Now it's down here around the $50 range, right? Took about a $5 to $8 price drop. Maybe I can sell some put options way down here that if it drops down that far, then it's like I'm getting a potentially getting an even better deal. Let me see how far I can go. So so I went to go over here, and this is I open all these up, but just so you kind of quickly see it before I open it all up. So I got a 5-day, 1 hour chart right here. 5 days of info, each candle being 1 hour. If it was easy to reorganize reorganize these, I would have them in a little bit different of a flow. I would have, like, I look at this one first, and then this one, but it's not in a line like this first, this second. It's not in a line like that. And it's not necessarily easy that I know of how to get it in order that I want. So I've just left it in this order for the moment. Okay, and then we got a 6 month, 1 day with a 200-day moving average. 3 years, 1 week with the 40 period moving average, which should be relatively close to the 200. And then 10-year, 1 month chart with 10 period moving average, which should be relatively close to the 200-day moving average. And then we got this here that has a cone of probability and this custom script that I got from Noah Davidson from the Cash Flow Academy via Andy Tanner. And then this one, 1 day, 6 months with a bunch of moving averages on it. And then this one with a volume profile on 1 day, volume profile on 1 week. So let's pop it open real quick. All right, so each candle is 1 day, and you can see each day is kind of has that line going through. So we got 5 days of information, and these are volume bars. Somehow I found this custom script, so it does more than gives you a lot more information. But one thing I really like about it is how it separates the red and green. So see this candle right here, how much of it was selling, how much of it was buying, and that type of thing. So basically, I see in the last 5 days, highest price 65. Yep. So it just dropped recently, right? 52. It could be dropping a lot more. So I'll look at the daily chart. Boom, we see that drop. Man, that was big, right? 1, 2, 3, 4, 5. Yep, it really dropped down recently. And so here we see it drop down below the 200-day moving average. Now it just popped up above it. Looking to the left, I see a little bit of something right there, right? Where it came down, it touched prices kind of in this area, started going back up. Also right here, right? Right there. Look at that, right in through there. And I bet you, if we look left, look at that. See how prices touch right in there? Wow, isn't that kind of amazing? So in this range, prices kind of get sticky. So what that's telling me is that it's going to have a hard time. It potentially could have a hard time getting back up here, especially to this like 60 area, right? And here's a big drop down. Now, how many days is it going to take to get back up to the top of this? I don't know. But also looking to the left, what I see right here around that, around this area, right in there, so 52, 53, right in there, support. What's area in there? Right in there, 52. What's this down in here? Right, you notice it's way over here. Look over there while I'm doing that. Okay, around $50. All right, so let's move on to look at the weekly chart. And I see a lot of overlapping of prices right in here. What price is that around? It's around like 55. What do I see? Look at this. It just sort of my eyes drawing to here to 45, drawing here and here to 50, and then all right, looking to the left, nothing over here. We see 45. All right, look at that. So it seems like 45 is very significant because prices came down here, touched the 45. Even before that, right, we see prices around here in 45, couldn't get over it. Coming over here at 45, look at this. It really, boom, it blasted through. I guess it really needed to because there's a lot of strong resistance right there or something. So it blasted through, and then once it got here, it's got some significance, seemingly has some significance at the $50 price point. But anyways, you can see prices, they pivoted here. They come down here around this 45, and it's now all this resistance area is now support for it. So, okay, so I see 45, 50, we got some stuff in there. Looking at the month chart for 10 years, and what am I seeing? Oh, look at that. I'm seeing around that 50 right here. There's a lot of price congestion around the 50. Here's where we were looking on the weekly with all that 45 action, but we see over here, right, 50, and we see how prices kind of, it's like sort of like here's the top, here's the bottom of that 50. This is probably 45, and then okay, before we go to the quote probability, this if I could put that a little bit, move it. Take a look at all the moving averages. I mean, it's not, I guess, all of them, but all the ones that I look at. 9, 20, 50, 100, and 200. And so what do I see? I see that it's above the 200, but that's it. It's below everything else, right? So it's showing me that based on moving averages, look, in order to get back up here to 60, it's got to get through all these moving averages, which it can. You know, here's the real resistance. This could act as resistance, but it's not resistance. It's a moving average, right? So you want to make sure you understand the difference. It can act like it, but it's not it. You know. So, anyways, okay, then look at the volume profile. Look at this. Right, here's a strong. It's like a magnet. So prices were up here. Look at this. All this coloration is kind of showing you where there's just been lots of volume of trading, and it's almost like kind of magnetically pulls to that area. That's probably not the best description of it, but for lack of a better description at the moment, I'm going through this video kind of fast. So it doesn't surprise me that prices got up all the way over here and it flipping gapped down here. Because look at that magnetic pull. Boom! Pulls it back down here. So what does it also tell me too? All right, this is the daily, 1 year. Right over here is like, here's 52. Look at right in here. It didn't get down to 52. It got close to 52 and reversed. right? Dropped way down here, got close to 52, reversed. Over here was at 55, but now it's over here, right? It got close to 52 and reversed, and it could come down and test it again. What was that pricing right in here? About 54. But what this is also showing me too is that based on this weekly time frame, if it starts pulling too far down here, it could possibly have the same effect like it had here. You see there's not a lot of color right there, so it's kind of like the weak magnetic pull here, strong magnetic pull here, boom, pulls it down. Now down on this side around the $50, there's significantly more, let's say, pull over here than it is over here. So why am I bringing that up? I'm bringing that up that I'm just clarifying that if prices come down here to 50, I don't think it's going to have the same pull back like this, but maybe it'll have a harder time coming down to 50. Not sure. You know, there's a bit of speculation. Now we're looking at that same volume profile on the weekly, right? 5 years, 1 week, and we see down here, we see here's the big mother load, daddy load of them all right there at $38. But look at that, 45, we saw that. And so, okay, I see we got some, I don't know about I don't know if I see Brent has some excitement here. So now, what was I, so what I was thinking is, and I see this $50 mark, right? And then I see prices got right here, they pivoted up. So I took a quick look at that quantum probability. Okay, I see 52, 50.62. Let me drop this down to about $50. Look on this side. Drop that down to about $50. Okay, it's 50.04. And then what date is that showing me? Right around there. Okay, look on the bottom of the screen. Look down here. Hopefully I can look down there. See how I'm going down? See where the date is? January 23rd. All right, so let me look at selling. Oh, look at this. It just happens to be 16 days away, January 23rd. Oh, look at that. It just happens to be highlighted because I already, like I said, I already went through this. And then I was going through it and I was realizing, you know, I can make a video out of this. So, so now what am I looking at here? I'm looking at the option chain. This is the strike price, right? Here's $50. Here's 50, you know, going up higher. Here's going down lower. This means that this contract is going to be in place for 16 days before it expires. Open interest. This is showing me that there's I guess you could say it's basically this contract has been traded it's been 147 trades, but none today. No high, no low, because it wasn't traded today. So it wasn't a high and it wasn't a low. And a delta of 12. So delta does more than what I'm going to explain right now. But for what I'm doing, selling a cash secured put option on a stock that I wouldn't mind owning, I'm using delta as a poor man's probability, or let's say a lazy man's probability, lazy woman's probability, lazy insert your proper pronoun probability, which would mean that this has, based on this quick and dirty delta, this contract has about a 12% chance of expiring below $50 in the next, you know, by the end of this contract period. And that to me kind of seems in line with all this chart stuff I was looking at, right? That's why I picked $50. I'm like, hey, what's something that's going to be a low probability? And let me see if I can get some, potentially get a reward for it, you know, get paid. It's still possible. It's not zero. It's not a 1%. It's 1%. It's still possible, but you know, a 12%, roughly 10 to 12%. It's like, it's a bit of an outlier, but you know, it could happen. And I wanted to see if I get some premium for it. So I click on this bid. When you sell, you're going to go with a bid. If you can't remember bid, or you don't want to remember bid, when you sell, you go with the lower number. When you buy, you go with the higher number. Why is that? Because that's the way that it is. Somebody's got to make some money, and we got to figure out ways to, you know, we got to figure out ways to make money while the market makers still making their money. So there's going to be this difference. Also, people would say, hey, look at Brent. Look at the bid-ask spread difference. The bid is at 25 cents. The ask is at 40. That's a big slippage, Brent. That's right. It is a big slippage. So why am I okay with doing this? I'm okay with doing this with a large slippage because I have no plan on closing this contract. I only have a plan on selling the contract, and if the contract expires in the money, I'm buying the stock. I don't care. I don't care about the bid-ask slippage in this situation because, again, my goal is to either have this expire worthless and I keep the premium, or it does not expire worthless. I keep the premium and I buy 100 shares of Cal-Maine eggs at $50 per share. That's it. So I don't care. I'm going to look at bid-ask slippage differently when I'm doing just straight option trades. But when I'm selling cash secured put options on stocks that I don't mind owning, I think it's beautiful. That's another reason why I think everybody should learn how to do this, because it's like so much easier. Hey, can I get what I want? Speaking of can I get what I want? All right. So what's the difference between where's the middle ground between 25 cents and 40 cents? Boom, it's right there. 30 cents. Now I'm actually going to pause this video. I'm going to close down my real account here, and I'm going to open up my paper trading account, and I'm going to send the same order into the paper trading. But I needed my charts in the paper trading aren't set up the same way. I'm in the process of getting them set up, but I wanted to go through and kind of not trying to explain everything, but go through relatively quickly so you can see the process that I go through. And hey, you know what? I might kind of I'm always updating this process. Anytime I can find a way to do it better, you know, I find a way to do it better. But the reason why I'm not sending this into as a live order is some people that watch my videos know that I'm getting ready to do an options trade based on the VIX. So I'm keeping my buying power, right? Option BP. I'm keeping that buying power is available as possible, because there's these option trades that I have been practicing in my paper trading account, and I'm ready to start doing just one so I can fully manage it. I have various trades open right now, but a lot of my open option positions expired last Friday. So now my buying power is, I have a lot of buying power available. So I don't want to send this order into the market, and because if I do that, as I mentioned, I'm not planning on closing this, right? This is not something that I'm going to set up, and then what if Cal-Maine tanks down to 40? Well, right now my plan is like, let me rephrase that. What I'm doing in the next week to 2 weeks is not looking at buying more stock. What I'm doing in the next week to 2 weeks is doing a specific options trade. So I want my buying power open. But if I were to, with this type of trade, which is selling cash secured put option on a stock that I wouldn't mind owning, when you're doing that, you want your account set up in such a way where you're willing to buy the stock no matter what price it's at, right? I'm buying it at 50. I'm making a commitment to buy it at 50. And for me personally, why would I do that? Because there's a variety of reasons, but overall, I think that it's if I pay 50 and it goes down to 40, I really don't care, because I think sooner or later it's either going to go back to 50, or even if it's at 40, I think I'll cash flow it through dividends. I'll write covered calls on it. It seems like overall it's probably not going out of business. People are going to be eating eggs as long as human beings are alive. So there's all these fundamental reasons why I wouldn't mind owning, you know, this particular stock, even if the price that I bought it at, 50 bucks, even if I couldn't sell out of it, because I don't want to sell out of it. I want to hold on to it for a long time. So the price ends up not, not mattering so much. For example, think about it this way. Let's say you bought a house and you're planning on living in this house for the next 15 years. After, when you bought the house, if a year later, if the real estate market crashed and now you couldn't sell your house for the same price that you bought it at, it doesn't really matter since you're not planning on selling it until 15 years down the road. It only matters if in your mind, if it matters. But when it comes down to your actual money, it doesn't matter because you weren't planning on selling it. So you buy a car. They say, hey, as soon as you buy a new car, you drive it off the lot, it depreciates in value. Well, your good buddy Brent buys cars and holds on to them for 10 to 15 years. So I don't care if it depreciates because I don't plan on selling it in 2 years. I don't plan on selling it in 5 years. I plan on driving this car until I cannot drive this car again. So I'm going to get all the depreciation out of it. So anyways, that's how I look at selling cash secured put options on stocks that I wouldn't mind owning. And other times I'm doing other trades where that's not what I'm doing. I might sell a cash secured put option on a stock that I don't want to own. So maybe I'll do a spread, maybe I'll do something differently, but I'm definitely not doing it on something that has a bid-ask spread like that. Nope, I'm not going to do it because if I don't want to own the stock, I want to be able to easily close it and get out of it without losing money. Anyways, let me put up the paper trade. We'll send that out, and so that way I can put it in the paper trading playlist, which, just to let you know, that paper trading playlist is going to be popping up, boom, right there. So you can check out that whole playlist if you want. I'll be right back. Okay, now we're in the simulated trading account. Let's check on the S&P 500 futures for the moment. Okay, so this is a 15-minute chart, 2 days of information. It's five-minute chart over here, and 1 day of information. Got a daily over here, and a daily. That's a daily. That's an hourly here, and a daily here. So this is what I'm practicing. Scalping, day trading on S&P or anything, but lately I've been practicing it on the E-minis. This is how I have it set up, where I'm kind of I'm using the trading on the 15-minute, but having an idea of what's the big picture going on with the daily, what's going on in the hourly. Also, I'm trading here, but I'm kind of timing it in here, and yeah, so I've been able to here and there scalp some some decent paper trading money. But futures is a different animal, so you want to get good at regular stocks, options on regular stocks. If you want to move into futures, get good at things that require less skill first. Build your skill. Learn to walk before you run. Maybe before you learn to walk, you got to crawl. Got to learn how to stand up, that type of thing. But look at that, shooting up. So anyways, let's just move over here real quick. We'll take a quick look at no futures trades open right now. Okay, so option trades. Here's this one, Amazon. Look over here. Okay, it is profitable. This is the VIX trade. This is the options trade that I was talking about. I've been practicing in the paper trading. I'm getting ready to do it in real money. So right now, Amazon it's profitable by a little less than 150. Now this one is actually a strangle, and I think at the 32-minute mark of the same video, there was a link that popped up for the playlist of the paper trades, and you can look for that strangle on GLD. And right now that is profitable by 48 bucks. Microsoft, another one, a VIX trade on that, a little less than 300. Netflix down by a little over 200. Nvidia up by 265, and SPX is it's a little over $2,000 of profit. Now I got orders in to close all these out at like halfway. What do I mean by halfway? For example, I brought in $3.65 of credit for selling this this option, and I want to buy it back at 120. How did I come up with that number? I took a handy dandy calculator, put 365, and I divided it by 2. It was very, very complicated quant mathematics. I just happen to have a short, one share of the S&P 500 short here, which this is actually, because I had this stock that I shorted and I forgot about, is one reason why I decided to make this playlist, because I was like, I gotta find a way to have myself be more accountable here. So this one is down by a little bit less than 15 bucks, and right now it's if it drops down $8.26, it should close out. Long stock. So now this is a cash secured put option sold on H&R Block. Strike price of 37 bucks. Where's H&R Block at right now? 35. And this next when we send in this order for Cal-Maine, it's going to be right here with its buddy H&R Block. Now look, this is down $182. I don't care. The reason why I don't care is because in 16 days, if I'm either going to buy the stock or I'm not going to buy the stock. Right now I'm going to buy the stock unless H&R Block moves up over 37. I'm buying the stock at 37, even if it drops down lower than 35. I don't care about this. I'm not losing money. I'm only losing money if I close it out. I'm not losing money. What am I doing? I'm getting paid 40 bucks to buy an asset that I think is a good deal at 37. Is 35 a better deal than 37? Yeah, but I'm not going to cry over spilt milk. I'm going to buy it at 37, and I'm going to be happy with it at 37. If I want to buy more at 35, I'll buy more at 35. Plus, it's in a paper trading account, right? So that's what's going on with that. Any open orders? No open orders. But let's put an open order in. So go back to trade. What are we doing? Trade all products. Cal-Maine Foods. Again, it's not financial advice. The stock's not suitable for you. It's not even suitable for me. I'm just doing this for entertainment purposes. I'm just going to do 16 days at the 55. Pull this over here. Now we're at 30. We'll see if we can get filled at 30. We're going to make this good till canceled. Right? This is basically saying going to sell one share at 55 strike price of 50. It's going to expire in 17 days. Hit this right here. I'm going to change this to long stock. What's this show me? It's affecting my buying power by a little over 500 bucks. If I get filled at this price at $30, to take out this is going to be my net amount. And it's showing that this is my max loss, because if the stock goes to 0, that's how much I would lose. And why? But you might say, hey Brent, you're buying 100 shares at 50 bucks. Why aren't you losing the full amount? Because it's 5,000 minus this credit coming in. So let's send that in. Boom! Sent in. Should show up. Bam! Right there. All right. Saying to sell. So the final time I'm going to say it. This is not financial advice. This is education. Here's the big picture that you can take out of it. Go to ihavesuccess.com. Also, download any of those free PDFs that you think will help you, and also watch that playlist, the beginner's playlist, so you can learn the fundamentals of selling options. You'll be able to get some charts set up, and then and it'll give you a rough idea of how to use them. And then there's the 5th video in that playlist will show how you can use the Yahoo Finance screener for free to screen for some good deals. And again, this whole thing's not the be all end all. So then what you have to do is you get a simulated trading account. Obviously, I like Thinkorswim through TD Ameritrade, which has been bought out by Charles Schwab. But it's like, I like Thinkorswim because, well, more than one reason, but two really big reasons is I get mentored by basically multiple people, but two out of the people that I'm getting mentored by, they both use Thinkorswim. So I'm just going to use Thinkorswim too, since they don't know each other and they're both using it and they both love it. So like, all right, I respect you guys. So, and you're both using it. So it's like, what are the odds there? So anyways, but get something that has paper trading. And let's say you're getting comfortable with something. Before you do it with real money, even if you have the money, paper trade it just once or twice, paper trade it a few times. Because each stock kind of has its own personality on the way it moves. And the market, is just kind of doing different things. And as a beginner or a relatively new person, you're going to be okay. The stock market is not going away. It's not going away. As long as humans are alive, just like eggs will be around, the stock market's going to be around too. So there's no rush. This is not a get rich quick thing. If you see videos on YouTube, ads on YouTube, and it's talk about get rich quick, I would look at them suspiciously. Right? Once you know what you're doing, can you make a lot of money in a short amount of time? Yeah, but is the learning curve quick for that? Probably not. You're probably gonna have to learn some stuff. So the only financial advice, the financial recommendation I can give you is paper trade. Like, that's it. Practice, 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 practice. And other than that, I think I'm gonna wrap this video up, because normally I like to already be having the lights turned off, going to bed at this time. But I felt like this was something I wanted to get out to you guys. If you feel like it, in the comments, introduce yourself, and let's make some more friends. But just gonna keep it. Be honest with you is I'm not gonna debate. I'm not gonna argue. I'm not into that. But what I am into is talking about this stuff. So hit me up. All right, aloha.